Hello, my name is Mark, and I want to teach something about active option tradings on stocks, or let's say what I have learned out of my losses. That is a kind of lesson learned. So it's a kind of report of the last 2 years about my stock investment and especially how I could reduce the losses of the stocks by active trading in options. Okay, have fun. So what you see here is actually my tastytrade position. tastytrade is my broker. Actually, I will do a video about the use of tastytrade account as well. But what you can see here is now my current position of the stocks. Let's say some of them are the meme stocks like Space, Sophie, Snap, Plug, Palantir, Novavax or AMC, BBY. You can see these stocks used to trade a bit higher. Here you can see the trading price. I mean, in where actually I sold the put at 1 or 2 years back, and what are the current prices here. So let's look in details about it. So what you can see here is nothing else that the trading, what I got the AMC, let's say at $20, BBBY at 19, Novavax 39, Palantir 26, the plug 30, the worst is Snap at 67 and Space at 20. So when you look these prices, which the put has been exercised and I'm now long these shares, well, here you can see just an overall of the 23rd of 24th of April, just 1 week ago, that now the stocks are trading more or less at that level. Some are even now lower, but seeing that in multiplying that current price with the 100, well, I get actually of the difference a loss of $17,523. So in other words, if I would keep these positions now from the time of the exercising of the put option up to now, I would have lost $17,523. But actually my loss actually is not this amount. My loss is about $5,900. That you can see that my initial investment was 100,000, and here you can see the current balance I have here in the account. So it's 94,100. In other words, my loss at the moment is still, I have to say, still a book value loss, we can call it, but it's obvious that you can see that the loss has been reduced by over $11,500 by just writing call and put options at the same time, whatever on the stocks and maybe on some new stocks. So for that, I will explain you now how I have proceeded. That you always can sell an option, a call option on an existing position. This is probably the first thing you would do, that you always keep selling options. And I think what's very important is that you do this continuous rolling of the call option into the next month. So in other words, I just keep selling options, and if you have seen, the stock has dropped, so I keep selling the option. And now what's very important is when actually the stock has dropped, is obvious that you cannot just sell at that price you got the shares. You have to adjust the strike of the call option as well. So it's as an example, let's say if you got AMC at 20 and the stock drops now to $5, you cannot sell a 20 call option. You have to adjust it. Let's say you sell a 6 or you sell a $7 option, right? And then actually, depending what the stock is doing, you make a continuous rolling. Rolling means that you roll the expiration. Let's say in this example of Amazon, I roll it from 28th of April into the 12th of May, and for that you can see here I get around $1 or $100 because I have 100 shares. So in other words, it's just a continuation of rolling. What happens sometimes too is that I get exercised on the call option. In other words, I have to deliver the shares, and then what I did is right away, the moment I get delivered, I right away sell an in the money put option. So it's obvious that I have to keep or I have to try to get the position back, so I right away sell a put option. So this is a kind of one strategy how I did. The other one which I could do from time to time, I mean this is what I said, the rollovers, is actually I could adjust the strike up or down. So in other words, here I have an example of Nike stock that I did a rollover, or because the Nike stock went up here, and then actually I did a rollover by going up with a strike. So in other words, you see that here I close the 123 and open up the 124 call. So in other words, maybe I get a bit less premium, but on the other hand, I just profit another full point on the stock of Nike. So I think this is an important thing too, that you adjust from time to time in rollover, you adjust the strike, because it's better that when the stock goes up that you adjust on the upper side, and obviously you can do the same thing on the put side, on the downside, to adjust it. I think this is the other possibility who actually provides me always an income if the option is now done by weekly or by monthly. I think this helps me a lot. So far now this small video about the lesson learned, and when you look here up you can see some new videos following up now. One would be to explain the Tasty Trade account, and then the others will be the option strategies, which will have 4 parts, and the future will show you more case studies about option trading. If you have any question or suggestion, just feel free to contact me on my email address. I think I will be happy to maybe even do a case study you're looking for, or maybe doing some Zoom teaching. There's all the possibilities I can offer to you. So feel free to contact me or just enjoy further videos so far. That's all what I would say, and I hope you have enjoyed, and I hope to see you again. See you, bye bye.